This voice is taken from an article with the title, How Do I Incorporate Economic Inflation Data into My Trading Strategy?, which has been published on TRADERTALKSNET. Incorporating economic inflatio and data into your trading strategy is an essential part of becoming a successful trader. Economic inflation data can provide valuable insights and help you identify potential trading opportunities. To begin, you need to understand the basics of inflation. Inflation is the rate at which the prices of goods and services rise over time. As inflation increases, the value of money decreases. Inflation is measured by the Consumer Price Index, CPI, which is an average of the prices of a market basket of goods and services. Inflation affects the forex market in a few ways. First, it affects the rate of exchange between two currencies. When inflation is higher in one country compared to another, it can cause the currency of the country with higher inflation to become weaker. This affects the rate of exchange between the two countries. Second, inflation can affect the performance of a currency pair. When inflation is higher in one country, it can have a negative effect on the performance of he currency pair. This is because higher inflation can lead to higher interest rates, which can make a currency pair less attractive to investors. Third, inflation can also affect a currency pair's volatility. Higher inflation can lead to higher volatility, which can make it more difficult to accurately predict the direction of a currency pair's movement. In order to incorporate economic inflation data into your trading strategy, you need to know where to find the data. The most reliable source of inflation data is the Consumer Price Index, CPI, which is released monthly by the Bureau of Labor Statistics. You can also find inflation data from other sources, such as the World Bank and the International Monetary Fund. Once you have identified the source of the data, you need to analyze it and draw conclusions. It is important to look at the rate of inflation as well as the trend over time. You should also consider the impact of inflation on the currency pair you are trading. In analyzing inflation data, you should also look at other economic indicators. Economic indicators, such as GDP growth, employment, and retail sales, can provide valuable insights into the state of the economy and the performance of a currency pair. Finally, you need to incorporate the insights you have gained from the inflation data into your trading strategy. You should consider how inflation will affect the performance of a currency pair and adjust your trading strategy accordingly. For example, if you are trading a currency pair with higher inflation, you might want to focus on shorter-term trades rather than longer-term trades. In conclusion, incorporating economic inflation data into your trading strategy is an essential part of becoming a successful trader. Knowing where to find he data and how to analyze it can help you identify potential trading opportunities and adjust your strategy accordingly.